Pete, everybody. Happy Wednesday. How you doing out there? Good. Good, good. See how I do that? Welcome to our show. We call it Closing Beat, short stock market update show. We're going to go over all the good, the bad, and the ugly, and we'll go from there. We're financial advisors here at Jazz Wealth, so we do this show every day just to try to build a little credibility with you, let you know that we're hopefully a little bit different, a little bit better than some of your other advisor choices out there. Hope you'll check us out at jazzwealth.com. We're also playing a game to try to entice you to come to our website, jazzwealth.com/guess the Dow. You go there, tell me where you think the Dow is going to close next week. There are no strings attached. We do not market to you in any way. I know you guys get that because there are tons of guesses every week. And yeah, just take your guess. If you're the closest, we'll send you a $100 gift card. If you're one of our customers, we'll credit your account $100. We're also doing the Jazz Artist of the Week, Mr. Brian Bromberg. Hell of a bass player. He's got a song with a lot of great sort of headline names on there. The song's called Mercy, Mercy, Mercy. It's not his song, but he plays a stand-up bass, just goes to town on that thing. Vinny Colaiuta, one of my favorite drummers, actually plays the drums on that one. You got Jeff Lorber, Boney James, George Duke, and Rick Braun also playing on that same album. So if you like any of those guys, I can't think of why you wouldn't like any of them there. They're also on not only that song, but that album as well. Let's go over the stock market here. We got minus 445 on the Dow, down 62 on the S&P, and 122 to the downside for the NASDAQ. What's going on, man? We've got our, you notice a pattern? We got our turnaround Tuesday, everything's good, and then we'll call them like Whack-em Wednesday or something where the markets just sell off. That's what we had here today. I will continue to suggest that we expect a lot of volatility in this area here. It's a very tough area for the markets to get through given the overhead supply as you look back through the later part of last year. And so that's what we're dealing with. There's going to need to be a whole lot of good news to get us through there. And today was not that day. We got a whole lot of bad news in the markets. We'll cover it there. The NASDAQ was the strongest of the group. It has been the strongest overall, and the Russell 2000 was the weakest out of the group. Your small caps continue to be the beaten down areas. So if you have small cap funds in your 401k or whatever, you'll notice that those will be the underperformers. That is typically the case in weakening in economic environments. We're also going to cover probably do a separate video on this maybe later tonight or tomorrow. You got a new stimulus package being debated in the House. Ridiculous what they're talking about, but they're talking about giving every single one of you big dollars. I'll cover it all and the details that they're currently debating later. They're talking about literally just handing out cash. Seriously, I'm not making that up. And when I post the video, not clickbait, I will go over all the details. Wow. So we'll go through that. Hey, let's talk about the markets here. That's what we're here for today. What was so bad about this market here today? Well, you got retail sales numbers. Let's take a look at the retail sales numbers on the screen, hopefully popping up here in just a second. There you go. Very, very weak. You had an 8.7% drop. It's worse than over 50 years. Look, I'm going back to 1990s here. That's the worst we've ever seen in probably most of you guys' lifetimes participating. You'll notice that every other time we've been this low or lower, we have been in a recession. That is essentially what the markets are trying to tell you today, or the retail sales numbers are telling you. This is currently in a recessionary period for retail sales. It was not good. If we go through some of the geeky stuff inside of it there, we were expecting a drop of 8%, just came in worse than expected. You know, I got something for you. Let's do it like this. There you go. That's better. Worst drop in over 50 years if you're taking a look at this. Here are the categories. This is very much like the S&P, where we say you've got the S&P 500, breaks into transports, bank stocks, tech stocks, and everything. They do the same with retail sales. They've got retail sales as a whole down 8.7%. Then they break it out into categories. So we made a fancy chart there for you and posted it online for you to take a look. Food and beverage seeing a nice little spike, 25.6%. That's going to be people, you're just still eating out. You're picking up foods and stuff. You're getting your delivery service and things like that. On the downside, you're going to notice the poor retailers in the clothing and accessory space. JCPenney, they're flirting with bankruptcy. We'll cover that in a minute. Horrible. That's the worst print for them since 1992. Furnitures and home furnishings, we're just not out there buying furniture right now. You see? 26.8% to the downside. Just incredible. So that gives you a breakdown of how things are going there. Gas stations, by the way, 17.2% to the downside. That is the second worst print ever in history there. So looking pretty bad there. Now, if you take a look at the retail sales as a whole, which category makes up the biggest category out of all of them? It is currently food and beverage stores, making up 17% of all retail sales in the mix there. Sporting goods officially only making up 1%. Now, with this 23% drop, only making up 1% of all retail sales here in the U.S., it's not pretty, right? is essentially the bottom line there. If you're taking a look at the markets today, that was one bit of bad news. We also had the beige book come out today from the Fed, which was just a bloody mess of catastrophe and chaos. Every single thing that they look at was either worse than they expected or getting worse at this very moment. So because of that, you've got a reason for the markets to sell off. I thought rather resilient. I thought they sort of hung in there well today, only to give us 2.6% to the downside was more than fair considering how bad the news was. And I thought today would be one of those great days to implement a little stat that Mr. Cody found over there. Yeah, so give him a little credit. Today, on this day in 1998, the New York Stock Exchange actually implemented the circuit breaker. You know, the circuit breaker, what stops the market from going lower or gives us a temporary pause. What they did was they put in a rule that says if the markets fall 10%, and you guys have seen some of those, if we fall 10%, we're going to stop the market for 15 minutes. If we then fall a total of 13%, we stop for another 15 minutes. And if we fall 20%, we just pack up shop, go home for the day is over. Well, that was officially this day in 1998. Pretty cool there. Our video today, FinTips, was how to pick stocks in a stock picker's market. I would say it seems like sort of widely accepted and reviewed positively there. So maybe we'll do another one and maybe focus on the financials this time because I think, you know, transports, that was just one off the top of my head that we covered. But maybe we'll do financials and see how do you pick a stock in the financial category that's expected to hold up through this mess or is at least not as exposed as some of the other banks, which you're seeing because of the earnings that came out in the scroller below. You can see it's not going well for the banks out there. Let's go over to your sector breakdown here. We'll take you to the charts and, oh good, they loaded. We'll go over to a couple sectors here. We'll do healthcare, pulled back 0.5% today, outperformed the market all day, meaning it didn't fall as much as the overall market. Still up over 30% since this low here, the March 23rd low. It is the best sector in terms of recovery, still hanging on to that. And one of the reasons for that today was United Healthcare added 4% on the day. United Healthcare beat on earnings by 7 cents, revenues as expected, and they gave guidance that was right in line as expected. They didn't take away guidance. They didn't lower guidance. They said basically as expected. So they're doing well there. That helped the sector overall. Communication services down only 0.9% on the day. The leaders in this category are going to be your gamers. Activision hitting new 52-week highs in the mix. Take-Two did fade at the end of the day, but still added about 0.5%. And Electronic Arts was your leader, hitting new 52-week highs as well. The old Cody over there, it's giving him a run for his money. We take a look, not that one, but this one. Here's his pair in the stock madness that we're doing. You can see it on our YouTube channel. His current bracket is Microsoft versus Take-Two. At one point during the day, it was a dead heat when Take-Two was higher on the day, but Microsoft leading the way. You got two good ones there heading into the home stretch of the end of this bracket for our game there that we're playing. If you want to check it out, it is on our YouTube channel. It's called Stock Madness, a little game we're playing there for a prize that only he knows at the moment. Consumer staples down 1.5% on the day, was unable to get above the 200-day moving average, unlike some of the other sectors out there, just not able to fight it off. Financials down 4%. This is officially year-to-date the second worst performing sector out of the group, with a now performance of negative 29% on the year. Can you guess the other one that's performing worse than that? You might have been guessing energy, and you'd be right, minus 45% there. Speaking of energy, let's go over down to oil. Oil actually finished the day lower by 1.3%, down at $19.95 a barrel. That puts it under the $20 mark there. We're back into the teens. Do you remember or happen to remember the last time you saw oil in the teens? I think I was a teen when that happened last time. Anyways, in the space there, you got some interesting news. Occidental Petroleum down 8.6% today. They owe Mr. Warren Buffett about $200 million in dividends. We covered this on Outside the Virus today in detail, but the way he owns his shares, he gets an 8% yield on those shares, and Occidental Petroleum can't pay the $200 million in cash, so they asked if they could sell 17 million shares in order to make good on their dividend payment there, and that is going to go through. That's officially what's happening there. Incredible. And actually, yesterday, 2 years to the date, I got to visit Mr. Warren Buffett's house. I posted that on Facebook there. He didn't let me in, but I got to visit and check that one out anyways. Home builders today. Home builder sentiment numbers below 50 for the first time. Can I put that one up? Am I going to be so lucky here? Here you go. Yep. Just go like this. I'm going to back this out for you real quick. Here is the whole home builder sentiment number falling back down to 30. Anytime we've been as low as the... I feel like I made a slide on this one. Yeah, there you go. That's what I wanted to show you. Not great news here, right? This is the same thing. Anytime we've been under 30, we've either been in a recession or just coming out of a recession. In other words, it's more bad news. Look how quickly the news changes like that. Everything seems good and then it changes just like that. If we look at these home builders individually and break it down by area of the U.S., what you've got on the chart there is you've got housing market out of the West, Midwest, Northeast, and South. If you look on the charts there, your Northeast getting hit the worst. That'd be up there towards New York and Boston and everything. Down back here to 19, very, very weak. The one holding up the best is down here in the South, right? We did take a hit, but not quite as bad as everything else. So there you have it. If we look over in the gold mining sector today, a little bit of a pullback, 1.95%. Remember our stats play from 2 days ago, that would be Newmont Mining. We pointed out that every time it was as extended as it was, 60% of the time, it actually pulled back. 35% of the time, it was only positive. The rest, it was negative, and we actually pointed out 1.17% pullback was the average pullback when it finds itself this extended. Over the last 2 days, we've more than accomplished that, so we can put that stats play behind us. Thought that was interesting. If you look over in the transports there, you got a small pullback of 2%. This was one of the weaker areas yet to recover. Second weakest sector of the market in terms of not being able to recover. And we, in our video today, in the FinTips, at 1 o'clock today, we posted on our YouTube channel a breakdown of how to pick a stock. You start with the stock market. No, I don't want to invest in that. I want to invest in individual stocks because this is a stock picker's market. We use the transportation sector as an example. Then we went inside the transportation sector and showed you how to identify the stock that you want to pick. We used a specific example, of course, not a recommendation. Anyways, check that out. But you've got individual stocks today. Did you notice the airlines? United Airlines up 3%. Delta Airlines was basically flat. Yeah, it did pull back towards the end of the day. And American Airlines added 3%. Here's the deal. Agree with it or disagree with it, the major airlines got their way with the government. The major airlines are all getting a whole bunch of money to the tune of billions of dollars apiece. And 70% of that does not have to be paid back. Just free money. 70% of the money that they get does not have to be paid back. For example, Delta Airlines is going to get $5.4 billion. That means $1.6 billion, well, of that 5.4 in total. 1.6 won't have to be paid back. The way the Delta Airlines deal is working, whether you like it or not, is it's giving warrants to the government to eventually or potentially acquire 1% of the business, taking an equity stake potentially of 1%. They get to buy those shares at $24.39, which I believe was of yesterday's close, or essentially today's close, $24.39 a share. They get 5 years to do that. They get all that money, 1% of the company. Do you agree with that or not? American Airlines is a little bit different. They're getting $5.8 billion. They only have to repay $1.7 billion. Out of all of it. They get 10 years to pay it back at almost a 0% interest rate. Do you agree with that? That seems a little odd to me, right? That they're just getting free money out there. And, we're told as personal individuals that manage our own finances, we're told to have 3 to 6 months of emergency funds. But you notice how every time a business gets in trouble, they run to the government and they get money from them. Where's their emergency fund? It's a little frustrating, isn't it? It's not one of those type of shows, though. Netflix, new highs today, and in fact hit all-time new highs. This is the highest it's ever been. 3.19% gain on the day overall there. Procter & Gamble. Oh, I hit that thing.
Hey, wait. Before you go watch one of our...
Procter & Gamble. Yeah, okay. Sorry. Procter & Gamble added 0.2% on the day. Doing well. Procter & Gamble raised their full-year guidance. They're moving their earnings report to tomorrow. No, Thursday. Friday. They're going to do their earnings report on Friday, and they raise their dividend. There you go. So Procter & Gamble doing well. What else do we have here? Let's go through some of the individual stocks. You got 8 new highs on the day. Your gamers are going to be in the mix, as we talked about. Activision and EA hitting new 52-week highs. Netflix and Walmart also hitting new highs. We talked about Netflix already. There's Walmart just barely poking up there, looking pretty good. Amazon, this is what I was trying to show you yesterday. Amazon added to the list of stocks that are above their virus high. Here is the chart. We posted it online, Twitter, Instagram, all that great stuff. But here's what it actually looks like. This is a list of all the stocks that are trading above their virus high and by how much. This is as of yesterday, so it needs a little adjusting for today. But if you're curious, where are the strong stocks out there? There's a whole entire list for you without us making any recommendations at all. As far as the S&P goes, 71% of the S&P 500 still has 20% or more to go before it hits new highs. Look how small the list of names is. 71% still has at least 20% to gain. That's not a lot, really, with this volatile market. That's actually pretty low, but that's what you got. All right, you got one new low today, and that was officially Franklin Templeton. They did hit new lows. Remember, yesterday we said a 6% drop would get them to new lows. Today the stock fell just over 6%. That did the trick. The next two that are closest, General Electric. General Electric's got 9% to go, and Walgreens Boots Alliance, if it falls 10% after today, that would be at new 52-week lows as well. All right, let's go through the stocks being affected by the virus today. We talked about the airlines. They're getting American Airlines $5.8 billion to support payroll. Delta Airlines getting $5.4 billion. They don't have to pay most of that back. Southwest Airlines is going to get $3.2 billion as well. Slightly different deal there. Carnival Cruise says despite things being weak right now, their 2021 bookings, he was on CNBC this morning or yesterday or something. He said the bookings are strong going into 2021. He's very optimistic and very happy about that. I believe him. He's a nice guy. JCPenney falling 27% today. They skipped their $12 million interest-only payment. They've got 60 days, I believe, an allowable window to make that payment. They're not going to do it. They're already looking for people to file bankruptcy for them. Not looking good for JCPenney. Procter & Gamble increased their dividend by 6%. I already mentioned that one step ahead of myself today. Dick's down 4% on the day. They updated their offering. They're going to do $500 million in convertible notes offered to the public, 3.25% interest, and I think you can convert after 2 years. I think the conversion was 2 years. Don't hold me to that. If you're interested, look it up. And Best Buy down 7% on the day, furloughing 51,000 of its employees. Stores are closed. If you want to order something from Best Buy, you got to drive up, they go get it for you, put it in your car, and at that point you go, Amazon. Just go with Amazon, right? So that's what you have there. Here we go. Everything went smoothly today. As far as earnings tomorrow, you got a laundry list here. You got Abbott reporting in the morning, BlackRock, Bank of New York, Delta Airlines, Dover, KeyBank and Morgan Stanley. Intuitive Surgical will report after hours, and so will Skechers. Dividends coming out still. There's not a lot of them these days. You got Foot Locker with 40 cents, and Yeti. Yeti is actually on Friday, will make its way into the S&P 600. Nice. All right, I'll take a chance here and try to answer some of your questions, and then if there are none or I have somehow messed something up, I will make good on that and be on my way. You want airlines to cut their ticket prices? I hear you can travel cheap right now if you're willing to travel. I say why not? It's just the problem is, like we've thought of all kinds of places we can go. Put a mask on, go to town, right? We've got plenty of the N95 masks and everything. Put them on. Let's go for a flight. But when you get there, what are you going to do? There's just nothing to do once you get somewhere. We'll see. Any perspective related to the proposed stimulus package on the S&P 500? Would this not dilute the market and create inflation? The Fed actually wants inflation. I do think it will create a longer-term path higher for inflation. But all in all, I don't think it affects the markets all that much. If you're giving people that kind of money, I think it affects the economy overall, but geez, it's incredible. That is incredible. Everybody's starting to talk about opening up their economies. I believe Germany, by the end of the week, is going to reopen their economy in stages. We, of course, have our own plans state by state here to see what's happening. It's going to be one of those scenarios where you can go back to work, but you should probably wear a mask and hand sanitizer and be tested and all that stuff. Yeah. Yep. Random question, Dustin. All right, let's try the random question. I'm answering questions on YouTube, by the way, if you're watching and have questions. In a taxable account, how do you determine how much the turnover ratio will cost you in taxes? I'm assuming you're invested in mutual funds, so first maybe you want to consider that as maybe something you don't want to do, but you would be able to see that with the individual funds. You could take a ratio of that if you have multiple funds by the allocation percentage that you have. Hope I explained that clearly. But first I would consider how important is it to you to have mutual funds in a taxable account. Not that they're all bad, but if you're playing more actively, they're Really? Yep. You think most people are going to buy stocks, especially if we keep falling lower, right? There's a number, and now we know the number. You look at the market, there's a number where people go, oh, forget it. I've got to take a shot. I've got to try to buy this market. Yeah. You think Florida's going to open back up May 1st? I think our governor is one of those who would push that. Yeah. I know the teachers union is really pushing not to open schools. That's a tough one. I wouldn't want to be in that position. But I think you're probably right that May 1st will be some form of reopening, even if it's a little bit. You got to get some good news out there, and provided that, it makes sense. Yep. Oh, yeah. Amazon is killing it. I will give you that there. Yep. The IRS started today to distribute checks, but you did not receive it. Yeah, actually, almost everybody I've talked to has got their payment. Remember, it goes to your bank account. You're not getting a physical check. 80 million people as of today should have the money. If you don't, somehow you got put on a different list, or maybe you don't qualify. But if you think you qualify, then, it's probably on its way. I think Friday's the next batch, by the way. Yep. There you go. Oh, yeah. What stops the New York Stock Exchange from being a 24/7 platform? They have rules for that. Like TD Ameritrade, you can trade certain ETFs 24/7 still. They still do that. But yeah, they have extended hours and early hours and things like that. Yep. Awesome. Well, as you can tell, we're getting a little rain here, so probably a good time to wrap it up. I do appreciate you guys watching, and stay tuned for the stimulus video. We'll knock that out, get that out to you so you can see what they're talking about in Congress, and tell me if you agree or disagree, because there's a lot of money being talked about, literally trillions, 2 to 4 trillion extra dollars. All right, enjoy your day. Thanks for watching, and we'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.